Hey everybody, Michael Filighera here. I am with logicalsignals.com and tradershelpingtraders.com. And today I'd like to bring my forecast for the balance of 2021 for the S&P 500 here on video. Before I can really start to begin to go into the analysis to where we are today within the S&P 500, I need to develop and demonstrate the larger picture. And I just want to give a little bit of background on my analysis techniques that I've been using. The primary one that I do use is R.N. Elliott's The Wave Principle. R.N. Elliott wrote this principle back in 1936. And what he basically was saying is that there is a rhythm in nature. And that he went into great detail about nature's law, or the law of nature. And basically, that the patterns are repetitive in nature. And therefore, since man or human beings are a part of nature, we are subject to those same laws. We tend to repeat ourselves. We tend to repeat in terms of our physical structure and how we coexist within our own planet, within the universe that we create within our world. And even though we may not understand the cause underlying a particular phenomenon, such as the law of nature, we can, by observation, predict that phenomenon's reoccurrence. The sun was expected to recurrently rise at a fixed time thousands of years before the cause operating to produce this result was known. Indians fixed their month by each new moon, but even today cannot tell why regular intervals characterize this heavenly sign. Spring plantings are witnessed the world over because summer is expected as next in order. Yet how many planters understand why they are afforded this consistency of the seasons? In each instance, the rhythm of the particular phenomenon was mastered. Man is no less a natural object than the sun, the moon, or the actions therein. In their metrical occurrence are subject to analysis. Therefore, man's actions in their metrical occurrence are subject to analysis. Human activities, while amazing in character, if approached from the rhythmical basis or bias, continue a precise and natural answer to some of our most perplexing problems. Furthermore, because man is subject to rhythmical procedure, calculations having to do with his activities can be projected far into the future with a justification and a certainty heretofore unattainable. Very extensive research in connection with what may be termed human activities indicates that partially all developments which result from our social economic processes follow a law that causes them to repeat themselves in similar and constantly recurring serials of waves or impulses of definite number and pattern. It is likewise indicated that in their intensity, these waves or impulses bear a consistent relation to one another and to the passage of time. In order to best illustrate and expound this phenomenon, it is necessary to take, in the field of man's activities, some example which furnishes an abundance of reliable data, and for that such purpose, there is nothing better than the stock exchanges or the stock markets. And with that came Elliott Wave Principle. And the Elliott Wave Principle basically has described in a pattern format that the markets move in impulse waves and countertrend or corrective waves. And Elliott, through his study and through his charting, came and decided or came upon the fact that the markets move in 5-wave sequences. And so it'd be a 1, 2, 3, 4, 5. That's a complete movement. But the movement in itself is not complete until you get an A, B, C corrective phase. And then these are building blocks. Now, of course, this is a chart that goes back to 1928, but they break down, so they become building blocks. The building blocks of Elliott's entire wave principle are impulse waves and corrective waves, and they repeat and repeat and repeat. And as they repeat and build, they are producing degrees of different natures. And now I am putting right here the degrees that I follow for today within the S&P 500. We have a super cycle degree, cycle degree, primary degree, intermediate degree, minor, minute, and sub-minute. Those are very small. As I've labeled them, the super cycle degree are in blue. And this chart goes back to 1928. That's as far as the data I can go. Actually, it goes back to 1921, but I can't see the data. In any case, we can take it from the crash of 1929 on. And therefore, we can start our analysis that according to Elliott, because this is what he did chart, that the top of that first wave up in terms of time, which was until 1929, was supercycle wave 1. And then the decline, which was the crash, and then the subsequent move into the depression, was supercycle wave 2. So as we begin our building blocks, we start with 1, 2. That's how they all start. And within this first wave of cycle degree are going to be 5 waves of primary degree. 1, 2, 3, 4, 5. So we have that. And then in each, we can break that down. So in each wave, waves 1, 3, and 5 of the primary degree, they're going to be 5 waves of intermediate degree, and so on and so forth. So it is a building block methodology. So back to what I'm talking about today. The big picture for the S&P 500 suggests the following, that we back in the early 30s completed supercycle wave 1 and supercycle wave 2. Then we started to do a supercycle wave 3 advance. Within that supercycle wave 3 advance, there are going to be 5 waves of cycle degree. Those are going to be indicated here in the brick red color. There's cycle 1, cycle 2, cycle 3, cycle 4. Cycle 4 ended in 2009. So you can see how long these waves of this size take to unfold and come to maturity. That the third wave actually went from March of 1942 to March of 2000. That's quite an extended period of time. So this is our big picture. So we need to bear in mind cycle 1, 2, 3, 4. So we are now in and tracing out a cycle degree wave 5 advance. Within that cycle degree wave 5 advance, there are going to be 5 waves of primary degree. Within that now, we have primary 1, primary 2, primary 3, and primary 4. So now I'm going to go down and switch over to the future, the S&P future, the ES, to pick up where we are now. So now we're down into the future. And again, the degrees that we have here are the cycle, primary, intermediate, minor, minute, and sub-minute waves. So now we can pick it up again. Here we have cycle wave 3, cycle wave 4. This is 2009. Within cycle wave 5, we have primary wave 1, primary wave 2, then we see primary wave 3 ending here. And then, but within that primary third wave, we have 5 waves of intermediate degree. And within the third wave, we had a distinguished or identifiable 5-wave structure as that wave extended. And then we have a 4th wave, and then we have a 5th. Now we've completed primary 3. Primary 4 takes us to the low of March of 2020. This is the place where after the first wave of the pandemic rolled through the United States, within 3 weeks, the S&P lost 38% of its value. quickly in 3 weeks. Now, I can bring this as a monthly chart. Let's take it down to a weekly chart and see if we can continue to see inside. Now, building block theory, the building block focus, that within each one of these impulse waves, depending on the degree, are going to be 5 waves of that one lesser degree. Well, now we're down to counting a primary 5th wave to complete this entire long-term cycle. Within it are going to be 5 waves of intermediate degree. So far, we've been able to track intermediate 1, 2, 3, and 4. Now I'm going to come down to the daily chart so that we can dip further into where we are. So we can see that we have completed up to intermediate wave 4. We're in the intermediate 5th wave. Well, let me just go back and take a look that within this 3rd wave, it also extended within that its internal 3rd wave. So within this intermediate 3rd wave, there are going to be 5 waves of minor degree. And those are labeled as such. So again, the building blocks theory that continues to adhere to it, and we continue to track as this entire movement heads to its pinnacle. Now, intermediate wave 3, intermediate wave 4. Now I can take it back down again, and let's just go to the hourly. So what we have, actually, let me go out one more to the 4 hourly so I can see where we are in that beginning. Okay, so there's 4. And if I just open this up a little bit, if it just does it for me. Nope, not 1, 2. We're going to try that again. Sometimes it gives me a little bit of a fit. And go back out to that 4 hour. And now let's see if we can do the whole thing. Thank you. So we can see that we have 3 and 4s down under here. Now, what we're going to count inside the intermediate 5th wave are 5 waves of minor degree labeled as such. 1, 2, 3, 4. Now, this 4th wave takes us up to August 3rd, 2021. Just as a quick reminder, this whole larger degree move started in 1929. So that's where we're going to start tracking it from, the crash of 29. So we are now up into the last intermediate wave 5, which will complete intermediate 5, primary 5, and cycle 5. So you can see the degrees that we're now completing. That's all coming from the larger picture. So we go from larger down to current, but it still represents what's happening in terms of, because we're still counting 5 waves and 3 waves and 5 waves, but we're working our way to that pinnacle. And so now we're going to go through that process of, well, how do we then figure where we are and what potential is left for the market to do? Again, intermediate wave 4. We're in the intermediate 5th wave. We've counted minor wave 1, 2, 3, and 4. Lots of demonstrations in between of a double ABC correction, of a diagonal triangle finishing a 3rd wave. So, but now we're down and we're counting from August 3rd of 2021, the final minor 5th wave up. Now within that minor 5th wave are going to be 5 waves of minute degree. Here we have minute 1, minute 2, minute 3, minute 4. We are in the minute 5th wave to complete the minor 5th wave, to complete the intermediate 5th wave, to complete the primary 5th wave, and to complete the cycle degree 5th wave. We are almost there. Today's activity. So today being the 16th of August, we had labeled the minute wave 3 complete at Friday's highs, looking for a wave 4 correction. We got it. Those are kind of ABC. We got that 4th wave correction, and it immediately rallied out of that to begin what I am now calling the last minute fifth wave up to complete a very, very long-term bull market. So what does that tell us? When we start to combine Fibonacci and Fibonacci extensions primarily, and what really is entailed there is learning the different relationships between the waves. And how does a fifth wave relate to the third wave? How does the third wave relate to the first wave? How do wave threes relate and tell us what the potential for a fifth wave can be? Well, I'm just going to back this back out just a little, go to my monthly chart to show you that fifth waves are related to third waves by Fibonacci relationships. So if I want to demonstrate or see what are the potential probabilities of where this primary fifth wave can finish or get to, I then run Fibonacci extensions from the start of wave three, which is right here at 20, this would be, no, it's actually 992.75. That's where wave three began. It finished at those March highs of 2020, up at 3,370.75, quite a third wave. Then we got wave four. So my extensions are 3 down to 4, and that's going to give me the Fibonacci numbers or sequences that will be relatable to this third wave. So we're now going to have some ideas as to where this fifth wave can go. And they're all basically lining up right there. But let me pull this chart down just a little so we're going to get a better idea. Again, those are going to be the ones that are out here. Okay, so we can see right now that now the most common relationship for a fifth wave to a third wave would be that it comes in at 0.618. So the distance. So we take the distance of primary wave three, and then we times it by 0.618. Now we can calculate the distance for that level in a primary fifth wave. Well, that was 3,644 or 3,645. And that, of course, was surpassed. Did create a new high, which it fulfilled its destiny, but went zipping right through that. The next most common relationship is that wave 5 will be equal in length to wave 3. And that comes in at 4,553.25. Now, remember that number. So now we're going to come back down to our hourly chart. Here we are, and now we're just going to continue to build our fifth wave relationships, because remember, we're completing a minor fifth, an intermediate fifth, a primary fifth, and a cycle fifth. So now we've now put up our numbers for that primary fifth wave and its area where it could complete. And now we're going to put in for the intermediate level. So we go again to the start of wave 3, up to the top of wave 3, down to the bottom of wave 4. And then that gives us the projected levels for an intermediate fifth wave. Now I'm going to come back down to my hourly chart. Now we're going to go back out. So now we have one more. So now we've already put up the primary degree, we put up the intermediate degree. Now we're going to put up the minor degree. Same exercise. We go from the bottom of the start of wave 3 to the top of wave 3 to where wave 4 concluded. Now we have the minor degree sitting up there. One last that we were able to add today, we add for the minute degree fifth wave. And that again, same exercise with the starting point of wave 3 to the top of wave 3 to the bottom of wave 4. Now, as we go up, within this minute fifth wave, I believe we've just completed wave 1. 1 of 5. Remember the waves, they break into 5 waves of 1 lesser degree. So minute, we're going to be counting sub-minute level. So this would be sub-minute wave 1 of minute wave 5. So these areas, it just got up to its most common relationship between 5 and 3, and that's the 0.618. It reached that today. I feel that this is just the beginning. So now we're going to go out, and right here at 4,504.25 is where this minor wave 5, minute wave 5 would be equal to the minute wave 3. That's at 4,504. Now I come out here, and this is telling me the the intermediate fifth wave would be, if it reaches this level, 4,507, it's 0.236 times the length of its third wave, intermediate 3 to intermediate 5. And that's right here. So we have a little bit of a cluster right there. But with the structure, because remember, in this minute fifth wave, I need to be able to count 5 waves of sub-minute degree. This is 1, I get a wave 2, a wave 3, a wave 4, and a wave 5 up. So continuing where this is all lining up, I'm now feeling that, well, we have a pretty strong wave 1. If I get just as strong of wave 3, that's where it should come. 4504. Now this lines up at 0.236, which is not the most common, at 4507. Maybe that's just going to be the wave 3. And then we come down in a 4, and then we head up to which could be the ultimate finish. So let's just kind of try to put this all together. Now, here we have the intermediate degree, and here we have the primary degree. So primary wave 5 would be 100% of the length of primary wave 3 at 4,553.25. What else is lining up in there? We have that the, the minute wave 5 would be 1.618 times the length of minute wave 3 at 4,549. And right above it, we have additional resistance based on minute 5. Can it get up there? Absolutely. If we get up even higher, then we're looking at the minor fifth wave. What could minor 5 be telling us? Well, right here, minor wave 5 is going to be equal to minor wave 3 at 4,531. So what did we just build? There's a very strong window of resistance to complete the entire sequences between 4,530 to 4,553. So we can say 4,560, 50, 40, 30. That zone becomes the zone where we have the most overlap on all the degrees that we're finishing. Remember, minor, intermediate, primary, cycle. So this is where I think the long-term bull market, which has been in effect since 32 in this market, in the S&P, is getting ready to correct in a much larger correction than I believe most people are expecting. Now, this isn't just going to roll over and play dead. It's going to drop down in 3 large supercycle degree A, B, C down. But that's going to break down again. And there, again, on the way down, same building blocks. If I'm looking for a supercycle degree, 4th wave, then what am I looking on a cycle level? I'm looking for a cycle level ABC to fit into that supercycle wave. What's going to be in that primary A wave? there are going to be 5 waves of intermediate degree or 3 waves of intermediate degree, depending on how this correction comes out, and so on and so forth. So we can break this down into where we think initially this will all start to come apart. The first true support level to begin to give support to this entire decline is going to come in on the primary level, and that big decline was right here. The primary 4th wave would be first up as support for a major corrective decline. Super cycle level, this is going to be the first level where the market can come down, find some support, and put in a sizable rally, and then continue on its correction. What would we ultimately look for in this correction? We have to go back out here, because the most common factor in a corrective wave, no matter what the cycle degree could be, or the degree could be, is that the correction will normally go drift down and find its termination point within the price territory of the 4th degree of one lesser degree. Okay, I'm looking at a super cycle degree, 4th degree correction. That portends to come right here. But it took us over 100 years to get up to this top, which we're not quite there yet. So it's not going to take just a couple of weeks, a couple of months. This should unfold over several years. If we think about that, this cycle for the correction took 9 years. That high was in the year 2000. That low was in the year 2009. It was a 9-year correction. I was trading during this period. There was plenty to do. There were plenty of trades. Do in and out option trades, position trades, day trading. It all existed, and it was quite nice. If you weren't so concerned about why are we dropping like a stone and banks are failing, et cetera, and you just turned to trading it, you could make a great deal of money playing this. And that's my next point. If indeed we are looking for a major correction that ultimately is going to bring the markets back to here, again, think about it, 665. We're at 4,475. That's quite a drop. Not going to happen overnight. We got lots of support in between for the market to come down and find its way all the way down. And again, it's going to stair step all the way down, just as it stair steps all the way up, because each level of degree, each degree level has to be completed along the way. These are building blocks. And if we have a clear understanding of Elliott and how then to combine it with Fibonacci, you've got a roadmap. You've got a daily roadmap that you can create and that you can run an analysis on to find out what are the parameters that you can put on for the following day's trade. Because remember, a day trader, I'm going all the way down to the sub-minute levels. But that's what's happening. And the market always will tell us what it's going to do. And what we combine together to make these moves and then to make our trading successful on any particular day is going to be based on what we see coming. So therefore, I am now in a position where I want people to understand what is staring us right in the face, what we're looking down the barrel of, and it's not going to be nice. But if you're prepared, if you can by any chance stand in the eye of the storm, you remember one of my favorite sayings, the eye of the storm is where there is calm. It's where the front portion of the hurricane has moved. And now you're in the eye with the back wall of that hurricane coming up behind. But getting into that eye of the storm allows the calm to envelop you as a trader. If you're stepping into a storm in the market, you want to remain calm and focused so that you can see the opportunity, so that you can see the direction, so that you can know how deep can it go or how high can it go, and then you can trade accordingly. But to do that, you cannot be in a panic. To do that, you have to remain focused. So what I am now putting out there is something that is telling us what's coming. Now, we can choose to learn new techniques, to learn about Elliott Wave, if you've already know about Elliott Wave, how to correctly apply it, how to apply Fibonacci, how to use your moving averages. And I tend to keep things pretty simple in terms of what I feel where support and resistance can come in. There are many, many, many techniques. And intraday, I use points of control, value area high, value area low, and moving averages, very near term moving averages, all the way up to 200-day moving averages. And those come into play frequently, and well, not frequently, every single day. But they guide your trades. Now we are positioning ourselves to trade up to the ultimate pinnacle. And I feel as a trader that I want to be prepared for what's coming in front of me. And how do I want to be prepared, or how do I want to be ready? Being able to recognize when the turn is going to come, being able to see what's happening in that particular turn, and being able to trade it. These are important factors. Now, it's getting stickier as we move higher, because the markets also are realizing this can't be sustained. We are reaching a top. We need to correct, et cetera, et cetera. So you're going to find that sellers move in and they're just happy as all to just get out where they are, to switch the position, to rotate to something else. But it involves buying and selling. And so being in a better position to understand what's happening in front of you and what the limitations could be for that particular time is essential in succeeding in trading. And so I'm offering a trade room that is going to be totally based on education. Yes, we trade. Yes, I share strategy. Yes, I share where the trades are coming in, but I do that through my analysis. And so I'm looking to teach. That's been my focus. So I want a trade room that is an educational trade room. It's a trade room where people can come in and figure out what they're doing wrong and maybe switch some things around and do things right. I am offering as well as coaching. So you can do a combination of coaching and a trade room. And we're taking time to go into a window, take an hour out of the market day while the market is trading, and get in there and find out what's happening and work out any hang-ups, work up any stumbling blocks, work out things that are occurring to us that prevent us from being consistently profitable, consistently successful, or not understanding why this move is happening, et cetera, et cetera. So we learn to work through those mind blocks, and so that we can go back to just trading. I approach the market by using Elliott Wave. Elliott Wave has stood the test of time and will continue to stand the test of time and provide us a roadmap, not only of where we've come, but a roadmap of where we're going. And that's where I think the value of Elliott Wave comes in. And now I'm combining that. And so I offer education, teaching, and trading in the trade room and through coaching. And I wanted to make sure that people are prepared. Are you ready for what is coming straight ahead? It can be very exciting or it can be very upsetting. You can be a part of the chaos, or you can be within the chaos, but not of the chaos, and therefore able and ready to look and take opportunities that will come in great numbers. When these moves begin, sometimes they're so fast that you're afraid to move in, because if you're wrong, you could lose a ton of money. So it's teaching at the same time, how do we get in there? How do we trade it? What is the strategy? Where do I put my stop? What do I accept? What instrument should I trade? How many contracts should I do? These are all things that you need to learn. And if you haven't, then you're starting from point zero. But if you have, maybe you just need to hone some of those skills. I'm offering the educational base to do all of those things. I want people to be prepared. My wish and my hope is that everyone has the success that they desire to have, but also at the same time, helping people figure out where their stumbling blocks are, where their roadblocks are that they just can't seem to get past. And that often can be achieved through coaching. So At the end of this video, I will be including a separate attachment, which will have links to take you over to the my Logical Signals Teachable account or website, where you will find the August and summer promotions for both the trade room and the combinations for taking the trade room plus coaching. I hope this has been of value to you, and please leave a comment or get in touch with me through through email or join the trade room. And then you can talk to me every single day. I thank you for your time. I thank you for your attention, and I hope to see you soon.